What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit that subscribe button today on YouTube, or if you're listening on the podcast, make sure you go and leave a review on iTunes or your respective platform. Today we're talking about crypto news. We're talking about Bitcoin, a little bit of a retracement going on. We're talking about Bittrex. We're going to dive into a few specific coins, talk about a few Amazon rumors. Speaking of Amazon, we're going to talk about the history of Amazon's price and how that leads into this idea of diversification, which I am starting to realize may be the thing that saves us all from the perils of volatility and leads us to the promised land. As you know, or maybe as you don't know, if you're new to the channel, my goal of this is to make an enormous sum of money that I can do good with later on in life, but capitalize on this financial opportunity in the best possible way. And I do that by networking with a lot of people, by sharing my thoughts and my process along the way, hopefully sharing some information that's helpful to you, but most importantly, helping you guys make better decisions in this game. Because in finance, the name of the game is the decisions. That's the difference between feeling FOMO about missing this unbelievable opportunity and actually executing on it and getting your piece of the action. Good stuff. And then I've got finally at the end, I got a fun little experiment that I found that I think is really relevant to crypto that you guys will get a kick out of. Let's take a look at trusty Bitcoin. I'm looking at the 4 hour. I always like to start with a 4 hour and then drill in as necessary. And you can see here, we peaked up right around 61, let's say call it 6180. When we hit 6,000, it really just blasted through, went right up to 6180, and then we started to see a bit of a sell-off before the Bitcoin gold fork, and then we saw a huge sell-off immediately at the Bitcoin gold fork, and we're continuing to see a bit of a sell-off. Nothing too crazy, but certainly a percentage, 1 to 3% a day, which is in crypto terms, it's pretty boring. But in regular markets, that's the end of days. So always keeping things in perspective. And there's a few things to notice. One, typically when you see this kind of retracement, and this comes from looking at a lot of different trading books that I've been reading, talking to some traders, seeing people on Twitter. When you see a trade that is this kind of up and down, it's not really volatility. It's just not very clear what the path is. You can see how on all these other 4 hour lines, it's a little bit smoother, so to speak. The trend is more clearly defined. This trend is pretty fat, right? It's up and down, but it's on a pattern. Historically, that does not signal an overarching bear trend, meaning that this may not be the beginning of some huge retracement. That's just what it is. And so I'm not overly concerned about this personally. I am still holding out for this 49.60. That's where my alerts are. That's not going to change. If it misses it, whatever, don't care. And here's why. I told you guys before, if you go back to the, September 1st peak, that's the last area of major resistance. I'm looking at that as support. Now, here's the other thing that you can do. Let's open up the Fibonacci retracement. Now, per usual, I'm probably going to do this in a way that every technical person is going to just skewer me, but I don't care, right? Because this seems to work for me. It's worked a bunch of times, and the premise seems to be clear. And what we're doing is we're taking it from the bottom and we're going to the top because we're doing a retracement, if I understand that correctly. And when you go from the top to the bottom, you're doing an extension. Either way, the numbers are the same. They just flip. So it's like, who cares, right? But anyway, I'm starting with the trend from September 22nd. And I'm clicking at the top of this. This isn't super zoomed in, but you get the idea. Now, the reason I'm starting here and not down at September 15th, which was the bottom of this trough, is that when you look at the previous trend, this was a 50% retracement, but it also isn't part of necessarily a trend. This was more of like a flash event. And so when you look at the trend itself, the strong trend lines, it really started on the 22nd. That's why this is the first place I look. And when you look here, you could see that the next inevitable trend line, the first is going to be at around 5170, 5174 specifically. And then the 50% retracement line is like 4850. So my bids will probably be in the low 4900s, give or take. But this is what the retracement would look like if it did do a big trace. And then if it did a major retracement, you can see the levels respectively after that. It gets down to 45 and then down to, what is that, 4,000, almost 4,100, right? And so what you do is you start to set alerts at all of these levels, and you watch the volume and the price action around those, and you see if it bounces or if it breaks down. And some people will layer their bids accordingly, and some people will just watch it and they'll wait till it either bounce. If it bounces, they buy then, or they wait to see if it breaks down. Some people just set the limits and layer their bids so that as the price drops more, you'll be spending more. So let's say you had 100 grand to spend, you'd put, let's say 10 here, 10 at 51.75, say. You'd put 25 at 48.75. You'd put 50 or 40 or 35, I guess, ish, right around 45.50, and then you'd put the rest down here, or whatever, however you want to tier it. But you'd want to graduate it so that you're spending more as it gets deeper, because your risk reward is going down. The chances of it popping off of this go up, right? The chances of it hitting are lower, but the chances of coming back are higher, which is why you want to save your big cash for the big dips. That's the name of the game. It's tempting to spend it on the upper limits, but that's when you get hosed. That's why you save it all for the really big ones. So this is the first retracement. Now, if the other one is that you can do a retracement off of a shorter trend, and this is where obviously this comes down to different traders are going to do this differently. I'm not saying that this is the holy grail. This is just the two things I look at in order to get my alerts. I personally look at this trend, the September 22nd. That's where I'm setting most of my alerts. But this is the other one, a little shorter term, that you can also take a look at. And the same logic holds true. The levels don't seem as clear here as they do on the previous trend, which is why I'm not as convinced on this one. But it can be helpful when you compare these two and see how it all matches up. Now, the other thing to keep in mind is that when this downtrend that started, I guess, on the 21st, this latest peak of 61.80 down, this is not a confirmed trend because it hasn't gone up again, or it hasn't really created a channel in any way. So technically speaking, what we're looking at is still a bull trend. It's still an upward trend, meaning that this downward action could easily spike up and be part of this this larger trend. But I think for all intents and purposes, we're good to go. So that's what I'm looking at. If you ever want to take a crack at this stuff, you can do this in Bittrex. They offer you pretty limited tools. You can go to TradingView and do this pretty quickly. There are plenty of people that will have probably more specificity on this, whatever you want to call it. But I will say that just being able to run these charts as an intro level person is helpful. And it's proven to be very helpful in terms of getting an idea of where to layer your bids and knowing how to layer your bids and getting the discipline to save your big cash for the big bloody ones. You won't burn all your cash on this stuff and then continue to watch it go down and down. All right. So that's what Bitcoin's doing. Obviously, it's hard to know as the fork looms on November 16th, especially with Coinbase coming out and saying like, now they're just going to wait and see which one gets the most mining support. That's the one they're going to support. It's like this thing has become a complete mess. So all your technical analysis has to keep that in mind, right? The macro forces always blend with technical. So this will adjust accordingly. But for now, that's where the bids will be set. Let's take a look at Bittrex, a little bit of altcoin action here. One thing that I've been keeping my eye on is obviously two things. One is Stratus and Zencash. I own both of these. And Zencash we talked about. There's a rumor, turned out to be true. There was kind of a debacle. Now there's this whole interesting debate on what's going to happen. We'll talk about that in a second. Stratus, I've talked about Stratus many times. I've scalped Stratus many times. And I bought some Stratus right around 51 in, I think, the second dip, like right around here. Yeah, like right around there. So this has been good. I already scalped pretty fat profit off this latest dip, but I own some as well from a previous scalp that I did right around, what was it? I bought some on this dip, obviously, back in July, or this dip, I should say. And there's been some mini scalps that I've done well on, but for the most part, the dollar cost average of that, or the cost basis, is right around, 170 Satoshis. So overall, I'm down on Stratus. This scalp helped a lot because I put a good amount of cash into it. And now it's coming out, or it's popping back up. Here's the reason why I'm talking about Stratus. If you draw a trend line, I'm just going to do this right here. I know for anybody out there, you're probably like, going to have a, freak out about this. This is obviously not perfect. I get it. But when you draw a trend line from the peak, and you could probably draw it from the candle if you wanted to, not the extension of the candle, to get a little bit of a better, so like that. That's not going to work. We're just going to keep it where it was. You can see that it's starting to break that trend line, that downward trend line, and you can see the new daily candles clearly above that trend line. And there's a few things to keep in mind with this. So from a technical standpoint, that's a good sign. Doesn't mean that it's going to come straight up. It just means that it's breaking out of this downward trend, at least showing signs that it will. So that's good from a technical standpoint. From a fundamental standpoint, if you've been researching and following the team like I have, you'll know that they have a great product. They have had a great product for a long time. They have a suite of great products. They have a good dev team, relatively speaking, but they've just been terrible on delivering on time. The delays are just, it's painful. And this is nothing new with tech companies, especially software tech companies. That very new companies like this, where they think, hey, look, we're going to make it perfect, and that's when we're going to release it, and not realize that how much competition is out there, how important being to market is in this game. A lot of this bump back is because they are getting very close to releasing. They've done a lot of testing with their new wallet, and they're doing hopefully releasing their master nodes next Monday, which have always been a big deal from both a marketing and from a holder standpoint. It just gets a lot more people to buy and hold your coins, which is historically good for prices with different coins. So Stratus is going to be an interesting one. I'm going to keep my eye on this. Obviously, I own a bunch, so I'm incentivized for this thing to work. It'd be great. But what I will say is that if they don't get these deadlines figured out, if they don't figure out how to get things shipped faster, it's going to be a big problem. And so that's how you got to really look at the ecosystem. And how you got to evaluate a company's prospects. Technical analysis, fundamental analysis, and then macro would be who's the competitors, who's trying to eat their lunch right now, and look at what they're doing. And how fast are they shipping products? How well are they getting partnerships? Go through the list. So that's the kind of thing that I'm looking at right now. I'm not looking at the stuff that's getting popped and pumped, because it's not really, it's hard to learn or discern anything from that. Zencash, what was interesting from a sociological standpoint is watching and seeing, I should say, let's do the 1 hour. You saw this huge rumor building, and then you saw it hit, and then it came down, but there's so much game theory involved because the rumor wasn't fake. It was based on somebody's recommendation who's a fair amount of track record and a big user subscriber base to be able to drive a lot of buyers. And so it begs the question of like, hey, it's a pump, but there's no dump because people are actually going to be accumulating this over the long term. And it's hard to know when the price is going to even out because it's just a huge game of holders versus sellers and how long can people hold it versus when's it going to really start to accumulate. So I think that Zencash is a really interesting one from a just from a pure game theory standpoint. I like it. I bought some. I don't know if I'm going to buy any more anytime soon because I think the price is it's gone up a good amount since I bought it. Or I bought it a couple $100 before the rumor just as like a YOLO type thing. And then once it dropped after the rumor, I bought a bunch. And so now I'm just kind of seeing what happens. I think other than that, pretty standard day. I mean, Bitcoin is really just driving everything, which is really what I want to talk about today over in the altcoin market. So let's talk about what exactly is going on with a few different rumors. We'll over the next few days and weeks, we'll get into the fork stuff, but I thought we'd take a break from the SegWit 2X fork because there's going to be a lot of news over the next couple of weeks, and I think it's just a lot more interesting to talk about other stuff. Remember a couple of weeks ago, there was a rumor going around by a blogger who said that Amazon may be talking about accepting Bitcoin. And I think their earnings call is tomorrow on the 26th. And now it seems like there's more. I'm not saying Cointelegraph is legit by any means, but I am saying that they're saying that they're seeing rumors from other people that this actually might work, right? And there's two reasons why I think Amazon would do this. One is because they want to be on the forefront of blockchain and technology and blah, blah, blah. But I think that's a pretty small reason. I think the big reason is that they want to get the PR that's going to come from Bitcoin is going to be crazy. And here's why. 2 years ago, I think it was 2 years ago, they did a whole special on 60 Minutes. And Jeff Bezos comes on 60 Minutes and he tells the whole world the drones are the future of Amazon. And these drones are going to deliver your products right to your doorstep. And guess what? It was the day before Cyber Monday, the biggest online shopping day of the year for Amazon after Black Friday. Black Friday is the biggest retail. Cyber Monday is the biggest online day. The night before that happens, he comes out and says, oh, we're going to do this big drone thing. So now they're doing a whole thing on the 26th. And another huge, huge shopping day for Amazon is Halloween. So guess what? If they talk about Bitcoin, guess who's going to be on every headline everywhere in the world? Amazon.com. Because they are now legitimizing crypto. Will that impact Bitcoin's price? Could be. I mean, but it really isn't until Amazon starts showing that how much Bitcoin they're accepting. That's when it'll really affect it. For now, this will get the attention of investors, institutional banks, and hedge funds and stuff. But they won't actually put money in until Amazon comes out and says, look, here's how much we get US dollars. Here's how much we get Bitcoin. It's moving the needle for us. This is the future of payment processing. That's when people will buy Bitcoin. Until then, it's just about getting attention. But I think that if they decide to do it, keep your eye on the PR more than you keep your eye on the Bitcoin price, the PR for Amazon, because every single person on Twitter and CNBC and Cointelegraph, Facebook, that's all they're going to be talking about. And everybody's going to be looking at Bitcoin price, when in reality, it's actually Amazon that's going to win right before Halloween, right going into the holiday season. Right? Q4 is when 45% of ads are spent on goods. And guess who's trying to crush Walmart right now? Walmart's making huge e-commerce moves. Amazon's trying to beat them. It's all about PR. It's all about attention, eyeballs, attention, interest, decision, action, AIDA. If you know that reference, you know what I'm talking about. Speaking of Amazon, I've been writing a lot of marketing pages, landing pages, copies, stuff like that for some new stuff. And I was thinking about, I often think about, as many of you know, if you haven't signed up for the newsletter, go to coinmastery.com/invest, download it, because I think in the second piece of that newsletter series, I talk about how I bought a bunch of Apple stock 2003, and then I sold it a couple, like 2 months later, and then they released the iPod, and I missed out on like a lot, you know. I mean, I think everyone kind of has one of those stories. I'm about Microsoft or AOL, and everyone's got something. But what I was thinking about, so Amazon launched in 1994, and then it went public in 1997. And if you look at this chart, this is not including splits as far as I can tell. If you look at this, June 1997, it was trading at like $1 or $2.30, let's say. Again, this is without splits. So this would be way more exponential, you know, as everything's baked in. I'm pretty sure it's split a few times. Now, if it was whatever, let's say September 1997, and Amazon is trading at $4.34, and it wasn't really doing as much. And you saw over here on the side, you saw pets.com, and you saw like the CarMax.com, and you saw all these different websites coming up, AOL.com, that were just raising massive amounts of money, getting all this explosive growth. And you were seeing Amazon.com that had an amazing leader, that had somewhat of a vision. It was pretty unclear back then. They didn't really know what the future of Amazon would be, but it was just, Jeff Bezos was a Terminator. If you don't know about him, I would encourage you to go read a couple of books about him, or read at least up about him. The guy's a savage business, like a visionary, both good and bad. I will preface that. But the reason why is that it would be very hard to know that Amazon.com in 20 years was going to be on pace to become one of, if not the biggest companies in the world, because it just didn't have, it wasn't mature enough. The market wasn't mature enough. The company wasn't mature enough. And it would be easy to pass this over in lieu of what was really hot right now. And the reason you would pass this over is not necessarily because of fundamental research. It's mostly because you didn't have buckets or baskets of coins that forced you to rebalance into owning a few coins or companies that had really great metrics of some level. In this case, really amazing leaders and team. And the reason I say this is because as we look at crypto, and if you are looking at the short term, you may not see the big wins. And if you think that you're going to hit the big wins early, and then later on you're going to shift to the big wins on the long term, that's very, very difficult to do. It's a lot more effective if you have a strategy that can scale out than if you try to shift your strategy as the market shifts. That's really, really, really hard to do. And so the reason why I'm bringing this up is, let's say this is where we are. Let's say that this is an analogy. December 1997, $5. And you knew that Amazon was $5, but it was going to take 20 years to go to 1,000. But if it did, you're gonna make an ungodly amount of money. And let's say this is what Bitcoin is, loosely speaking. How would your strategy change right? What would you do differently? Would you put more money into Bitcoin because you knew that it was going to be huge in 20 years? You're going to be crushing it. Or would you allocate a little bit more to Bitcoin or more to altcoins or not anything to Bitcoin because it wouldn't move for a little while and it would have a little bit of a crash and then it would come back even bigger? How would you change your strategy if history showed you that this is probably what's going to happen? And, some would say that this is what 2013 was, this 1999 bubble, and that this is where we are. Some people would say that the internet bubble is where we are now and that we are going to be, 100x bigger when this hits the masses or whatever. That's what I tend to agree. That's what I tend to think. I think that we have a long way to go. But it's super important to keep this in mind because what you're going to find, and I think that the reason why this is relevant for you is that as we go through these forks, as we go through these tumultuous times, even if you scroll out, if you're not diversifying in a way that capitalizes on a lot of the upside and mitigates a lot of the downside, you're going to wake up in 2010 and look at your overall returns and be like, I would have been better off if I hadn't done anything, if I had put my money in something that was like 10% a year. And I can tell you that is the number one thing that keeps people up at night in crypto, is not necessarily that they're going to do something wrong or that they're going to mess it up, is that they are going to be in the game and that while being in the game, they're going to make decisions that they wake up in 10 years and people are like, well, what do you have to show for it? You didn't even capitalize on the big stuff. And that's why people get so hung up on trying to get the short-term wins and trying to get the big wins right now and not focusing on how do I diversify for the long-term play. And the reason why I bring this up, one, is because volatility is going to, this is just going to keep continuing. And two, is that I think it's when you start to look at your overall returns, mitigating for these downswings is really how you get big returns. If you want to make 100% a year sustainably for 5 years, which by the way, as a compounding return, that's going to exceed making like 1,000% on a small trade right now. It will, because you can put so much more money into it. But the more you can mitigate these down cycles and not be as concerned about capitalizing on the biggest possible upcycle, the more you are going to ride the overall exponential curve of crypto. And that's a really important point. Being able to ride this whole parabolic thing for the next couple of years is more important than trying to pick the one that's going to make you rich in the next 3 months. And this is a counterintuitive idea, and it's also hard to wrap your head around if you're starting off and you don't have a lot of money and you're looking at crypto as a way to go from $1,000 to $10,000, and then you think, okay, now I'm going to diversify accordingly. And what I'm here to tell you, as somebody who has had a lot of experience with this, with investments, with dealing with a lot of people, is it doesn't matter how much money you have. It matters what your strategy is. And then if you need more money, you need to go make more money and dump it into that diversified strategy. A couple links that I'll post. So Ray Dalio, I've posted an interview of him with Tim Ferriss, which is really good. And here's what he does. He does 30% stocks, 15% intermediate bonds, 40% long-term bonds, 7.5% gold, 7.5% commodities. Now, this may look really boring, right? You would look at, I think anyone would look at this who's in crypto and say, that looks so dumb. Oh my God, I can't believe it. And yet this, because it had the ability to not get hit by the recession nearly as much as most portfolios did. Over a 10-year window, he could pull in 30, 40% returns. And if you look at crypto, if you put your money in altcoins and you don't get it right, if you don't have a diversified strategy, it's going to be really difficult to beat 30, 40% returns over a long period of time. Eventually, they just won't come back. So I'm not saying that this exact one is relevant, because I can't say like 30% Bitcoin, 50% Ethereum, 40% Litecoin or whatever. Nobody knows that yet. But as you are looking at your overall picture, both investment profile and in crypto, you need to balance out things. If you have 50% altcoins, you need to have 50% Bitcoin. If you have 30% Bitcoin and 30% altcoins, maybe you need to have 40% cash. But you need to have certain things balanced out so that your returns don't get eaten alive by these dips. And then they have to make all this money back just to break back even. You know, you can actually have lower dips and still get some of the upside. You can ride almost like a moving average, which is really the way you want to do it. Similarly, David Swenson, another legendary investor, he's got a portfolio. And I'll share all this stuff. But as you guys are looking at your portfolios, the more I talk to people that have made enormous amounts of money, both in crypto and outside of crypto, they all agree that you need to be diversified in some way, and specifically, you need to have a portfolio that doesn't get housed by these huge dips. That typically comes from having a cash hedge or from having an equal balance of altcoins and Bitcoins or whatever. But across the board, because I sit there and I ask them straight up, I go, listen, here's where I am. I want to hit, let's say, $50 million, and I want to do it in 10 years. What's the thing? And they say, you got to be diversified. You can't, because if this goes down a lot, that's going to crush you in many ways. So that's number one. You have to be diversified. And number two is, like what we're doing. You got to be smart. You got to pick good coins, and you got to know what you're doing. And they say that's secondary, right? Like that's important, but the diversification is number one. And it's so much less sexy. Everybody wants like, well, what's the hot coin? What's going to be huge? And the truth of the matter is no one knows that, and no one's going to be able to tell you that. Like even the people who are building these coins don't know that. There's a lot of really good theses out there, a lot of really good stories about which ones could go huge, which ones may not. And there's ways to control that on the short term. But having a balanced portfolio, and this is something we'll get into. I don't think that this is really what a free YouTube video is really good for, because this is the kind of thing when you do get into financial planning, this is when you have to do it behind a gated area. But that is the thing. These ups and these downs are not going to stop. In fact, they're probably just going to get more severe for a little while. And even if institutional money comes in, it's going to go up really big and it's going to come down really big. And if you're not in a position where the downs don't hurt you and the ups still bring you up, and you give up a little bit of that like Lambo dream, you're going to be better off. The chances of you making really, really big money go up considerably. So I'll link to all this stuff. But for anybody who's been watching these from the start, that's always been the question: is how do I capitalize on this the most? And what I'm realizing is that the highest probability thing is stay really diversified and just dump more money into crypto. The high risk is try to bet on a few coins that may go huge, but that's not really a strategy. That's crossing your fingers. That's like a very high probability lotto ticket. It's like 20% instead of 1. And that's not really what I'm interested for my future. I want something that I can bank on. And I hope you do too. I think that I think that what the last thing I'll say before we do the final image, I've been in the shoes of anybody watching or listening to this, where you start off with a little money and all you can think about is how to turn that small amount of money into a big amount of money as fast as possible. I have been there, and I've talked to a lot of people who have been there as well. And it's a very, very, very difficult thing to do. That's just the truth. What does work is if you take that money and you're smart about it, and then you focus on how do I just get more money in here. And if you can't get more money in there, you shouldn't be in crypto trying to make money to begin with. Like this isn't the place for that. You're gonna get too emotional. So I'll leave it with this. This is an interesting image I saw on the internet from a book. It says, which bowl would you pick from? If you're listening on the podcast, there's 2 jars. The one on the left has, I believe, 10 jelly beans in it that are 9 of them are white, 1 of them is red. And over on the right, there is, I think, 100 jelly beans, and 9 of them are red. 91 of them are white. So when there's 10 jelly beans, it's a 10% chance of getting a red one. When there's 100 jelly beans, there's a 9% chance of getting one. And so what this picture says is, in this experiment, researchers instructed people to try picking a colored jelly bean from either of 2 bowls. In the one on the left, 10% of the jelly beans were colored, and the one on the right, only 9% were. But people still preferred to pick from the bowl that they knew had lower odds of success because it felt like it offered more ways to win. Meaning, when people looked at these 2 jars of jelly beans, even if they knew that their chances were lower in the big pot with a lot of options, they blindfolded and dipped their hand in, they knew that their chances were lower, and they still went for the one with more options. Okay? When we look at crypto, this, in my opinion, is exactly what's going on here. The chances of you making money over the long term, and I say that 2-3 years, are probably higher if you just buy Bitcoin and maybe a couple of the other top 10 coins. The chances are probably higher. I think that everyone would agree with that. And yet people are putting all their money into altcoins that have a lower chance, with the specter of it being a bigger return. And they do a ton of research. And I think there's a lot you can do to mitigate that risk with fundamental research and everything in between and marketing. But people are always drawn to the area where there's more options, even if they know it's a lower chance of it working out, because the specter of it potentially going big is just too appealing than to settle for 80% gains a year or whatever it may be. Right? They're willing to give up almost 50% chance that it's going to work. Like they drop their probability to 15% that it's going to work out in order to make 3 times the money. And that to me is crazy. That's wild. I think that this isn't going to change. I think that that's the nature of the altcoin market, and the more people that come in will continue to do this. And I think that that's what's going to keep driving altcoin prices up, is that as soon as people buy Bitcoin, which is what I'm working on, like that's my big initiative, is how do I get as many people as I can to go buy $100 worth of Bitcoin? Because once you buy Bitcoin, it's impossible to resist altcoins. And so people go in and they just start diving in and they try to buy as many as they can with low cap, even though they know that statistically speaking, 90% of these coins will not exist. In fact, there was an article that came out that showed that 90% of ICOs that have been released this year do not have a product and are not shipping anything. 90% of ICOs, nothing. It's just, that's it. And yet people will still bank on them because they think, they hope it's going to work out. So in your portfolio, as you diversify, ask yourself, would I be happier with let's say I make 200% a year owning the big coins, but it's probably going to happen. What would that do for me? Or am I happy with a 15% chance of getting 500% returns? And that may seem like, of course, you're willing to roll the dice and do all that. But all I'm saying is there's ways, have a little bit of leniency for yourself. Diversify, play the long game. Because when you look at this Amazon curve, there is the promised land at the end of the tunnel, even with the big coins. Right? The crypto is going to be huge. And people just get, eaten alive on these ups and downs, being all in altcoins or trying to make it all so fast. So this is just what I'm finding. I think a lot of people are going to agree. I think a lot of people are going to disagree with me, and that's fine. I think that the point of all this is just to show you the learning process that I'm going through and the conclusions that I'm coming to. And this is one that I keep hearing. This is from hedge fund managers, traders, people that are really, really rich. So like, just don't get smoked by the dips. Buy the dips, but do not be beholden to the dips. Have a hedge in every possible situation. That's what's going to get you to where you want to go. And when really smart people who have made enormous amounts of money give me advice, I listen to it. And it might not be what I want to hear. Ideally, I'd want them to be like, no, you go and here's the formula to go on CoinMarketCap and go to number 226 and, follow this exact strategy. And here's the formula for fundamental research. And that's how you make 20x. And you can't do it with liquidity, but you could do it with 5 Bitcoin and you'd be fine. But none of them say that. Zero. They all say the same thing. Diversify, mitigate the dips, make more money, and buy more crypto. Cool. All right, guys. Always a pleasure to be here. Thank you so much for watching. Make sure you share this with a friend if you haven't already. And I'll see you tomorrow. Peace out.